It seems this is just not the week for mining issuers that are reporting their fourth quarter earnings. Hudbay Minerals is the latest to disappoint, with the equity down as much as 16% in midday trading following the release of their Q4 earnings. Why the crash? Let's dive in. Hudbay Minerals in the fourth quarter reported revenue of $585 million. Despite it being a jump from the $486 million reported in Q3, it was a 3% decline versus the $602 million in revenue reported in the fourth quarter of last year. They also failed to achieve analyst consensus estimates of $588 million. After cost of sales of $401 million, the company managed to post earnings before taxes of $104 million, which was a large improvement over the $81 million posted for the same period last year. Net earnings amounted to $19 million, or 5 cents per share, versus $34 million, or 10 cents per share in the fourth quarter of 2023. Adjusted earnings totaled $70 million, or 18 cents per share, which was well below estimates of 20 cents per share. Adjusted EBITDA for the fourth quarter came in at $257 million versus $274 million in Q4 of 2023. For the full year, Hudbay managed to post record top-line revenue of $2 billion, which was a 20% jump from the $1.7 billion in 2023. Earnings before taxes improved from $152 million to $252. However, net earnings were still down year over year, coming in at $68 million, or 20 cents per share, versus $70 million, or 22 cents per share in 2023. Adjusted earnings per share improved to 48 cents from 23 cents last year, while adjusted EBITDA improved from $648 million to $823 million on a year-over-year basis. While the income statement may not have seen a strong performance, the balance sheet was a different story. Hudbay saw its cash equivalents, and short-term investments rise by $332 million over the course of 2024, which went from $250 million to $582 as of December 31st, while long-term debt declined from $1.3 billion to $1.1. Net debt over the course of the year fell from $1 billion to $526 million. While the financial performance was a mixed bag, the actual production results fared a bit better. In the fourth quarter, Hudbay produced 43,000 tons of copper, 94,000 ounces of gold, 1.3 million ounces of silver, 8,400 tons of zinc, and 195 tons of molybdenum. Compared to the third quarter, production across all metals except for molybdenum improved. But compared to last year, well, only production of silver and zinc improved. And things weren't any better on a costing basis, with the cash cost per pound of copper produced climbing from 16 cents to 45 cents on a year-over-year basis in the fourth quarter, while all-in sustaining cash costs rose from $1.31 a pound to $1.53 a pound. Things were a lot better on a full-year basis, however, with Hudbay reporting 138,000 tons of copper produced, 332,000 ounces of gold, 4 million ounces of silver, 33,000 tons of zinc, and 1,300 tons of molybdenum. Production of zinc and molybdenum was down significantly on a year-over-year basis, while the production of copper, gold, and zinc all saw strong gains. This increase in the production of gold and silver is also credited with the increase in revenue on a full-year basis, with production improving amid rising precious metal prices. Gold accounted for 35% of revenue in 2024 versus 29% in the prior year, driven by pricing improvements alongside record production. Cash costs per pound of copper, meanwhile, declined year over year, falling from 80 cents a pound in 2023 to 46 cents a pound in 2024, while all-in sustaining costs fell from $1.92 a pound to $1.88 a pound. It should also be stated here that production guidance was achieved for all metals, while cash cost guidance was outperformed, despite guidance being improved twice throughout 2024. Despite a strong production year for Hudbay, the drop in the market post-earnings is believed to be a result of the guidance, which left a bit to be desired. Consolidated copper production is expected to come in at 133,000 tons, which is slightly below the 137,000 tons produced in 2024. But the big hit comes from gold production, which is estimated at 278,000 ounces, which is a 16% decline versus 2024 production levels. The decline here is said to be a result of the accelerated mining of high-grade gold benches in the fourth quarter of 2024. Silver production is expected to be down slightly as well, at 3.96 million ounces, while zinc production will decline to 24,000 tons. Only molybdenum production is expected to improve this year, with guidance calling for 1,400 tons. And while production is expected to come in lower, costs are expected to rise, with consolidated cash costs estimated to be in the range of 80 cents to $1 per pound of copper. Sustaining capital expenditures, meanwhile, is estimated at $365 million for 2025, while growth capital will come in at $205 million, which includes $65 million for the continued development of Copper World and $55 million in throughput improvement projects in British Columbia. Exploration expenditures are estimated at $40 million, much of which is to be spent at Snow Lake in Manitoba. All right, so let's wrap it up. From a production perspective, 2024 was a great year for Hudbay Minerals. But from a financial perspective, there's room for improvement. Unfortunately for investors, 2025 is looking to be a bit more of the same, except with lower production levels, which doesn't really bode well for the finance side of things. On the bright side, 2025 started off on a good foot for the company, with the receipt of an air quality permit for their Copper World project in Arizona, which is set to be the company's next major asset. The company is now in the process of sourcing a joint venture partner in advance of a definitive feasibility study it plans to establish this year, with the company hopefully reaching a construction decision in 2026. In the interim, exploration continues at the Snow Lake operation in Manitoba, while efforts are to be made in BC to improve throughput rates. But with a currently declining production profile, this is a name that unfortunately leaves a bit to be desired by investors. All right, everybody, thanks for watching. We enjoy all the comments that you guys have bringing us. We are bringing you guys lots of content the rest of the week and throughout 2024 Q4 earnings season, which we are in the middle of. All right, everybody, thanks for watching.